I'm your host, Ashton Dean Osborne, and this is Guided by Good Sense from Cedar Point Federal Credit Union. Cedar Point Federal Credit Union was organized in August 1945 to promote thrift among its members and provide a source of low-cost credit. As a member-owned, community-based financial cooperative, a large part of our mission and the reason we're establishing this podcast is to educate others and provide them with the tools to make informed decisions while mitigating risk to themselves. In this episode, we'll cover the latest news on pennies now that they're no longer being produced, the ins and outs of identity theft and how to protect yourself from becoming a victim, and how to define, build, and improve your credit. The U.S. Department of the Treasury officially stopped penny production late last year. This is due to the price of producing pennies increasing over the past 10 years, raising the total production cost of a penny from 1.3 cents to 3.69 cents per penny. The change happened quickly, leaving many questions. First and foremost, pennies remain legal tender and retain their full monetary value. This change does not affect electronic payments, checks, ACH, debit, or credit card transactions. These transactions should continue to be processed to the exact cent. While penny manufacturing has ceased, the Federal Reserve will continue to circulate the approximately 114 billion pennies that exist for as long as possible. The U.S. Department of the Treasury encourages the public to spend their on-hand pennies to support a smooth transition and allow retailers and point-of-sale system providers time to adapt. This will help keep the existing supply in circulation, ensuring clarity and fairness during the transition. As of now, we are listening and waiting for the federal government to put in place guidelines for the gradual phase-out of pennies from circulation, including cash handling, support for businesses and merchants, rounding practices for cash transactions, and state-specific tax rules as they evolve. While we wait for the next steps, we will continue business as usual. Cedar Point lobby coin machines will continue to accept pennies. Please note that we do not accept rolled coins in our drive-thru due to their weight. For the latest news and updates on the phase-out of the penny, visit the U.S. Department of the Treasury's website at home.treasury.gov. While fraud is not new, bad actors are constantly developing new and innovative ways to separate you from your money. In an increasingly digital world, it's easy to make mistakes, and having your identity stolen can have lasting repercussions that are difficult to recover from. In 2024, 1.1 million reports of identity theft were submitted to the U.S. Federal Trade Commission. Knowing how to protect yourself and recognizing the red flags of identity theft could help keep you from becoming part of the growing number of reports submitted. Identity theft is a type of fraud in which a bad actor steals and uses personal or financial information for financial gain, usually by opening new accounts, using existing accounts, or obtaining loans in a victim's name. The sensitive information stolen can include full names, addresses, credit card or bank account numbers, social security numbers, and medical insurance account numbers. Identity thieves use many methods to steal sensitive information. One of the most common scams used to get information is phishing. Phishing occurs when fraudsters attempt to trick you into revealing personal or sensitive information to access accounts, often by impersonating a legitimate source. Many phishing attempts use fraudulent phone calls, texts, or emails. If you receive a call, text, or email asking for personal information from someone claiming to be your financial institution, do not respond. Instead, call your financial institution from a trusted number to verify the legitimacy of the communication. Other tactics used to obtain sensitive information include installing skimming devices on ATMs, point-of-sale systems, and fuel pumps to gather card information, or stealing IDs, credit cards, and bank cards. Information can also be stolen digitally by coming through social media accounts to find identifying information in posts or photos, or gathering information from mobile devices when they're connected to public Wi-Fi. Some scammers even resort to rummaging through trash to retrieve documents with sensitive information, such as bank statements. Victims may not immediately know that their identity has been stolen, and will only find out once extensive damage has been done. Red flags that you may be a victim of identity theft include bills for items you didn't buy, debt collection calls, entries on your credit report for accounts you did not open, denial of loan applications, or mail not being delivered to or missing from your mailbox. While it may take time to know if you're a victim of identity theft, you can start implementing practices to protect yourself, like not answering phone calls, texts, social media messages, or emails from numbers or people you do not know, and not sharing personal or sensitive information such as your bank account or social security number with others. Along the same lines, you should store sensitive documents such as birth certificates and social security cards in a secure location and properly dispose of documents that contain sensitive information such as bank statements by shredding them. Other things you can do to help protect yourself include collecting your mail daily, regularly reviewing account statements for unauthorized or suspicious transactions, being cautious of what you access on public Wi-Fi, and placing a credit freeze or fraud alert on your credit report. Despite our best efforts, accidents can happen. If you suspect that you have become a victim of identity theft, notify your financial institution immediately. If necessary, you can report it to the major credit reporting agencies and the U.S. Federal Trade Commission online at identitytheft.gov. Improving or establishing your credit can be daunting, but with the right tools, you can set yourself up for success. In this segment, we'll go over how to define, build, and improve your credit. Credit can be defined as borrowed money you can use to make purchases with the trust that you'll repay the money in the future. There are two main types of credit, secured and unsecured. Secured credit allows you to borrow a set amount of money and repay it through monthly payments for a fixed amount of time. It is typically used for large purchases and is attached to an asset, such as a house or car. Common examples include mortgages or auto payments. Unsecured credit is a type of credit that is not attached to an asset. You are often approved for this credit based on your creditworthiness, which can include your credit history, credit score, income, and other bills. Unsecured credit usually has a higher interest rate because the lender assumes greater risk. A common example of unsecured credit is a credit card. Another major way that credit is categorized is whether it is a revolving or an installment account. Revolving credit allows you to draw on the credit repeatedly once you begin to pay down the original balance. Installment loans provide a loan of funds once and then require you to repay it over a fixed term. Both types of accounts can be secured or unsecured. Now that we've established what credit is and the type of credit available, what's a credit score? A credit score is a rating that represents the ability or likelihood that you will repay a loan. Credit reporting agencies will use criteria to determine credit scores, and creditors then use these scores and your current financial situation to determine your eligibility for a loan. Two of the more common scoring models are VantageScore and FICO. Cedar Point uses the VantageScore model, so it's the one we'll go over. The way your VantageScore is calculated depends on which version you're using, and we'll be exploring the 3.0 version today. VantageScore breaks the criteria into 6 categories used to calculate your credit score. These categories are payment history, depth of credit, credit utilization, balances, recent credit, and available credit. The weight these factors carry in determining your credit score varies by credit agency. Payment history makes up 40% of your score and can be affected by factors like on-time payments, missed payments, having past due accounts, and bankruptcy filings. Depth of credit makes up 21% of your score and takes into consideration the average, oldest, and youngest account age, and whether you have a mix of revolving and installment credit accounts. Older account ages are good for your score because they give lenders an idea of how you handle money long term. Credit utilization makes up 20% of the score and considers how much credit you have access to versus how much you utilize. The amount of credit you use each month and your total credit limit make up your credit utilization ratio. Ideally, you'd like to keep this under 30%, as a large ratio suggests you may be relying on credit too much. Balances make up 11% of your score and consider the total balances on all credit accounts. High balances affect your score negatively. Recent credit activity makes up 5% of your score and can be affected by new hard inquiries if you've opened multiple new accounts, as well as the length of time between opening new lines of credit. Available credit makes up 3% of your score and considers how much credit is available to use on your revolving credit accounts. Building credit can be challenging, especially if you're considered credit invisible or don't have a credit history with one of the nationwide credit reporting bureaus. This can make it challenging to get a school, car or home loan, a credit card, or rent a place due to a lack of existing credit. There are a few avenues where those who are credit invisible can establish credit. If the person's in school, they can get a student credit card, which caters to those who have little to no credit. Another option is a secured card, which requires a cash deposit to serve as collateral. Individuals can also apply for credit with a cosigner. If you apply for a line of credit with a cosigner, you should discuss possible issues that may occur with your cosigner, as there are repercussions for both parties if a debt goes unpaid. Once you have your credit established, improving your score is the next challenge to tackle. You can improve your credit score in several ways, including bringing past due accounts current, starting with the most recent missed payment, paying your loans and bills on time, paying down credit card balances and paying them early, adding eligible bills to your credit report, being strategic when applying for credit, and reviewing your credit report for errors. Identity thieves try to capture sensitive information and can use it to open credit accounts in your name, so taking measures to protect yourself from fraud is crucial. Remember never to provide personal or sensitive information to someone, especially if they call you from a number you don't know. Legitimate organizations will not call unprompted for this information. One of the ways you can protect your credit from fraud is by regularly monitoring your credit reports for anomalies and mistakes, which can help you catch issues before they become too damaging. If you're a member with Cedar Point, you can access a credit module in our digital banking, and you can check for free without a hit to your credit. Other financial institutions offer something similar, so be sure to check with your financial institution to see what tools are available to you. You can also place a freeze on your credit report, which keeps new credit accounts from being opened in your name. You can still apply for new lines of credit by temporarily lifting the freeze. In addition to monitoring your credit, you can request a copy of your report annually. All major bureaus provide a copy of your report once a year for free, and you can request your copy from annualcreditreport.com. And that's all for this episode of Guided by Good Sense. This episode was produced and edited by Ashton Dean Osborne and Kristen Kaufman. Cedar Point Federal Credit Union is federally insured by the NCUA. Thanks for listening and join us next time on Guided by Good Sense.